Hello traders, how are you? Vladimir Ribakov here from Traders Academy Club, and welcome to the weekly Forex forecast for the week starting of 15 to the 20 of September 2019. First of all, thank you very much for your time watching this video. I hope you will find it useful and beneficial and helpful to your trading and your trading ideas during the week. If you enjoy the video, please show your support back, hit the like button and leave some feedback in the comment section below. It will take you 15-20 seconds. It will be a very big help to me and the channel to continue and grow. For all those of you who are new to the channel, welcome to our family. I invite you to subscribe right below the video. Make sure to enable the notifications ring. Feel free to share the video with anyone who you like. This is completely free and open for the whole trading community. And I invite you to join my free Telegram channel and my live trading rooms to get all the trading ideas day after day, and the links to join right below in the description. So this is the weekly forecast for 15 to 20 of September. As always, we would be now reviewing the previous week trading ideas. This is a good time to remind that on Monday I will be publishing a new text format for the forecast. Just come back to the blog vladimirribakov.com, and on Monday you would see this post ready for you, or just come back to the video, and below in the description and in the comments you would find the direct link. Of course, if you are in my groups, in Telegrams, you would get notifications as well. So what did we have previous week? What's still relevant? What worked? What paid? What failed? And what do we take with us for the current week as well? Let's start with the pound versus the Australian. The idea, we're looking for long-term sells. The short term view was during the week, look to sell the rallies with the idea of gaining some momentum for longer term. Now on the during the week we got the drop down. It worked pretty nicely. However, for the long term there is no momentum gained, and we got a break out of this consolidation pattern, kind of triangle, towards the opposite direction. It does not change the long-term cycle, however it does change the timing with the long-term trade, and the best thing to do currently is to wait until this cycle will rebuild and will complete a deeper correction of a triple-double trading structure. Therefore, at that moment, the pound versus the Australian, which performed nicely during the week with sell the rallies ideas, never managed to deliver for the long term yet. The best thing to do right now is to go neutral. For all those of you who love the short term trading, this might be the one. It will slightly push it further until the daily would complete its divergence. You can see that the daily is moving inside sort of a channel, so pushing slightly higher until it will become a divergence could be a nice thing. For me at that moment, for the long term, it is neutral though. And the next pair is the Australian versus the Kiwi. We were looking for a corrective cycle to happen. Corrective cycle as always could happen in two waves or a range before the main trend continuation. So during the week, this is exactly what we were exposed to. This is a range. We never managed to get deep to waves. We did manage to get the ranging structure during the week. This is where we played, and as you can see, we completed 5 spots here inside the range, after which we got the breakout and a trend continuation. According to the weekly and the monthly cycle, as you know from the previous weeks following me and my forecast, you know I am bullish for the long term. So I believe that this pair would continue to create new highs until, well, first of all, we do need to pay attention to these levels right here. Some serious numbers in terms of resistance. The closer we will get there, the stronger the next pressure for deeper correction would be. This is building up a bearish divergence, and once it completes, we then likely will be exposed to deeper correction downside, and again all that would be just a part of the continuation. So for all those who are riding the trend for the longer run, once the daily would hit a divergence, and ideally the 4 hour would become some divergence by itself, something like that, that will be the time to cash out. And for all those who are looking for opportunities to join, a trend, the idea is to wait for deeper correction. I mean, for all those who are looking to join the long term, to wait for deeper correction for some sort of bullish head and divergence on the daily, and only then look for the right. This is for the Aussie Kiwi. Next one on the list, New Zealandian versus the Canadian. We wanted to see retraces and buys. And here we are, retraces and buys. Kind of slow, still performing to the upside. Kind of slow, can't say I'm crazy about it. It's not likely, it's not over yet. There is no ending divergence from the daily. We did not reach any top of the Bollingers after the 20 candles right on the Bollingers followed up with a bullish divergence. Therefore, my personal view, we still continue higher. I would say if we cross below this level, it would be some suspicious sign, as that's the first triple cycle, double cycle correction, likely to assume we are going slightly higher here. So my idea for short-term further bullish continuation remains on. Dollar yen, we were heading towards 108, 109 area after the 4 hour chart correction, expecting the daily to be two waves. Daily is still developing it, which makes it very likely to go for deeper correction further on. Meanwhile, on the short term, after the drop down here, we got it all the way towards the 108, 109 zone. The pair right now has a bearish divergence and it is building up pretty seriously. During the week, dollar yen was one of the ideas for a sell on the short term ideas, day trading ideas. If you are new to that, right now on the right side of the video, right top corner, you would get a direct link to the playlist of the day trading ideas. As a subscriber to the channel, you would be exposed to them on daily basis when they are uploaded. So during the week, I was following to see this trend line breakout, which clearly did not deliver and did not manage to hold, even though we started to see creation of lower lows. And as I always share and teach, if we get one cross backwards above the 61.8 Fibonacci, this is immediately a warning sign for us as traders to know that this is the best time to step back and wait for the next opportunities. And this is how you as a trader can save yourself money in cutting loss early. It's one of the techniques I apply, and just think about it this way. We cross here, gaining some momentum ideally, by 61 straight leg, we understand not working. Getting a small loss, cashing out, with a little loss, and the next time when it will pay, boom, it will pay much more. And that's the whole idea of risk reward trading. And doesn't matter if it's long term or short term, this is what helps you to control your risk and exposure live. When you get one shot movement against you going through all the Fibonacci levels and going below 61.8, this is a warning sign and a place where I cut my exposures. It's very, very important lesson. So what's next with this pair? Due to the levels, the cycle levels, everything in play and the divergence, my view is that 108, 109 should deliver us the correction. I don't think it would be long-term correction. I think it would be short-term correction, and we should likely to continue further. If we have a quick look on the statistics of the Forex crystal ball, we can learn that 15-13 was the days I was expecting during the day trading video. The stoppage, it happens now from Friday, right, through the beginning of the week. That's where I expect some pullbacks. Looking on the levels, we can see clear levels from the daily are waiting us right here. The channel that should be dynamic, rising to the upside. And after the correction happens, pay attention to these numbers, right? So few days as for continuation. If it continues slightly deeper, then the 24, 25, 26 become the critical numbers for further continuation on. So the statistical dates, as you can see, could contribute us timing or confirming the movements within the cycles confirmed by divergences. So that is my view for the dollar yen. I believe this is a good place for cashing out. We should be exposed to sort of correction, smaller or maybe a bit deeper into waves, and then rallies to begin. So that's for the dollar versus the yen. Pound dollar buy retraces for a corrective cycle. Say no more. I think it's pretty straightforward here. Here we are enjoying the ride. The daily special cycle is correcting itself. What are the targets we have for this rally? 38.2 delivered, 50 might still deliver. As for now, there are no opposite signs preventing that from continuation. So basically, it could develop further. For all those of you who are riding this movement, it delivers more than 200 points. Just make sure you manage your positions correctly. Do not be exposed to any sort of randomness by the market, by any tweet, speech or rumor from whoever it is in the leadership. They have the ability to change the direction the wind is blowing. Currently the wind is pretty bullish, and as for now, I don't see why would that stop. Keep in mind that the fundamental events happening around Brexit and the parliament in the UK and so on could, with a blink of an eye, change the direction. That's why it's extremely important when you are working with sensitive assets, and currently the pound is sensitive in its behavior. It's important to manage your trades more professionally than just set and forget. So that's for the pound dollar, which delivered beautifully. Euro yen, 2 waves expected, 2 waves delivers. It works pretty classically. So what's next with this pair? Once again, if we observe the cycle, we are next to the 38.2, and in between 38.2 to 50, this is the best place to cash out the profits. Pay attention to the bearish hidden divergence developing here, or even from the most biggest, from the furthest high in this cycle. Pay attention to this hidden divergence, and once it will fit in with the 4-hour chart divergence, which by the way currently starts to happen, it would be a good sign to start and cashing out at least partials. And for the longer view, as this is the corrective cycle that is developing, the dynamic trend line would be a good place to trail the stop loss, right, accordingly, every single time the pair continues to move higher. Break below the trend line would be a place to get out completely from the trade. That's for the dollar yen, for the euro yen, which delivers and currently maintains its momentum. It's a great place for cash out, at least partials. New Zealandian franc, then expectations 2 waves to the upside, and here let's take a look on the deeper view. Correction and further move to the upside all the way to the clearance. So right with the opening of the week, despite the spike, we got an immediate rally which delivers the corrective cycle as we want to see. And right now, personally, I see no clear picture here. Daily is a bearish hidden divergence. 4-hour is a bearish divergence. Weekly is a bullish divergence. That means lack of synchronization. That means lack of interest from Uncle Vlad. Neutral on this pair. Euro versus the pound. Sell the rallies was the idea, expecting it to continue lower. Well, euro pound, here we are, got the 2 waves and got the continuation. What's next with this pair? I believe it is developing itself yet. The daily divergence not completed. The 4-hour chart divergence not completed. The weekly pressure is yet bearish. 4-hour chart and even 1-hour chart not completed divergence. So the way I see that personally, as long as we are below this trend line, sell the rallies is still the correct thing to do. As per the levels, I would take this developing cycle and put Fibonacci expansion on it. 100% is the first place to pay attention to for possible bounces, and the next possible target comes all the way down to 0.8640. The current pressure remains on. So this is for the euro versus the pound. So the rallies is still the right thing to do from my point of view. Australian versus the franc. This is the place where we wanted to see it's reaching and making a correction before further buys taking place. So here we are, reached the zone, exactly clearance area in play. This trade, by the way, was also delivered to you inside the YouTube channel as a day trading opportunity on Thursday, and the idea was right here, looking for 2 waves on the 1-hour chart. We got it delivered, and the biggest question is what is now? So the corrective cycle, as always, could be 2 waves, could be sort of a range, this or other way around. If we get if we get 2 waves here, perfect. After that we would be looking for bullish divergences and buys. If we are holding for a range, we need 5 spots inside it, right, and a breakout. And also, if we take a quick view on the stats, then we can see that between 12 to 15 was the level where we anticipating the top, and we got it. So as per the move down, we have our the channel and the support is slightly lower, and if we push there for deeper correction, right, if it is building the two waves, then we likely see that pushing through the whole week, and then by next week the buys to take place. If it's going to hold a range, and we cannot ever predict anything like that in advance, then likely the movements are going to be small and sensitive inside before the break further to the upside. Exactly like it happened with the Aussie versus the Kiwi, which we saw before. So that's my view of the Aussie versus the franc. And before we move on to the commodities, quick view of new opportunities. So Euro Pound discussed. The next one would be the Euro versus the Canadian, which delivers currently triple descending weekly cycle, ending with bullish divergence, which brings in a play a daily cycle by itself. Well, you can observe that the weekly triple cycle provides the daily movement by itself. And of course, the 4-hour chart, which delivers the false breakouts and the convergence. We are currently in a straight breakout, Bollinger Band duplication, clearance zone activated. This clearance zone might be activated as well. This is the place where I would expect some corrections and further continuation to the upside. The 1-hour chart delivers what looks like 3 higher high, 3 higher low structure with a bearish divergence. So from the coming area, I would be expecting it to see some corrections and further continuation to the upside. So buy retraces with bullish evidences is the plan for the Euro versus the Canadian. The next pair on the list is the CAD franc, which continued to move inside the dropping channel, and from the top of it, it holds with a bearish hidden divergence on the daily time frame, and the 4-hour chart fits in with this beautiful false breakout and break of the low, creation of convergence principle. I believe this is the first leg of which could deliver further move down. 1-hour chart fits in the structure of lower highs, lower lows, trending conditions, and somewhere from these areas I would expect it to deliver some corrections and further continuation down. CAD franc, sell the rallies plan. And the final one is the pound versus the Australian, which is moving in pound versus the Kiwi, sorry, which is moving in triple double structure, blocked with a bullish divergence, yet delivering. Daily is that developing cycle. While this is developing yet and pushing further, if we throw Fibonacci's on it, you can see that 161.8 is slightly higher, and it falls in a great duplication area right here. So next to 198, 199, we could expect some good payout there. So the way I see that, the pair is bullish, and I would be looking to buy retraces. I expect the 1-hour chart, when this one completes its higher highs, higher low structure, buy retraces should be the right thing to do. As always, straight sudden move below 61.8 would invalidate the bullish view, and we will go neutral, waiting to see for next signs. That's the 3 new pairs for this week. Natural gas delivered an amazing run for us. Right now it reached some critical levels where I believe we should be looking for or expecting some corrections. This should deliver the triple special cycle, in that case, correction and further rallies. So the plan unchanged. And the gold, we wanted to see the push down and here we are building it simply perfectly, right? And I think this one has still a room to go lower. According to the daily cycle, we might see that going all the way as close as to 38 or even 50%. So the bearish view of the gold remains on. I expect that to continue lower and sell the rallies would be the plan here. Invalidation for that would be if we suddenly go above the trend line. In that case, it would invalidate the bearish view. And as per indices, I was looking for the German DAX to break the rising trend line to provide sell opportunities. And as we can see, the German DAX never yet broke the trend line. Moreover, it continues to climb and climbs above the falling trend line from the daily. Sorry for the wrong drawing here. Climbs above that. This is invalidation of the pattern currently, which makes me to go neutral in my view, as that's not the structure I want to work with. As simple as that. And when it's not clear, I step back. So these are the best opportunities as I see them for the coming week. And once again, I would like to thank you for your time watching this video. I hope you find it useful, helpful, and that it gives you some good trading ideas to watch with. Don't forget for the day trading opportunities I upload to the YouTube channel day after day during the week, as long as the market provides us great opportunity. And of course, if you would like to join us in the live trading rooms and to enjoy from all the most interesting trading opportunities as we have them day after day, back up with full detailed trading reports covering all the most interesting opportunities as we see them, the link to join the Traders Academy Club is right below in the description. Thank you very much for your time. I wish you a wonderful week, and I'll see you around. Yours, Vladimir Ribakov, Traders Academy Club.